And the global chip shortage that is hindering production forecasts of giants like Apple and Volkswagen also is here to stay until first half of 2023.
Have you ever dreamed of owning a luxury car but just thought it was too expensive or just out of your reach? Well, you might be in luck because the biggest used car market crash of our lifetime has begun. But why is this happening and how can you take advantage of it? Let's find out more. The main cause of the crash of the used car market is the global chip shortage. Chips are small electronic devices that are used in many products such as computers, smartphones, and cars. They are essential for the functioning of the modern technology, and they are in high demand. However, due to the COVID-19 pandemic, the production and supply of the chips have been disrupted. Many factories had to shut down or reduce their capacities while the demand for chips increased as people stayed at home and bought more electronics. This created a huge gap between the supply and demand of the chips, leading to higher prices and longer wait times for the chip orders. The chip shortage has a direct impact in the car industry, especially the new car market. Many car manufacturers have been unable to produce many new cars because they lack the chips needed for their engines, infotainment systems, and safety features. Some car makers have even stopped or delayed the launch of new models because of the chip shortage. This has reduced the supply of new cars in the market, making them more expensive and harder to find. As a result, many people who want to buy new cars have turned to used car markets instead, hoping to find cheaper and more available options. The increased demand for the used cars have driven up their prices to record sales. According to the U.S. Bureau of Labor Statistics, the average price of used cars and trucks rose by 45.2% in the year ending in June 2021. This is the highest annual increase ever recorded since the data series began in 1953. The high prices of used cars have also affected the rental car industry, which relies on buying and selling used cars to maintain its fleet. Many rental car companies have sold off their cars during the pandemic to save money, and now they're struggling to buy new ones because of the chip shortage and high prices. This has led to a shortage of rental cars and higher rental rates for consumers. However, the used car market crash has also begun as the prices of used cars are starting to fall. This is because the supply and demand of used cars are changing. On the supply side, the used cars are entering the market as people are selling their old cars to take advantage of the high prices. Some people are also returning their leased cars, which adds to the supply of used cars. On the demand side, fewer people are buying used cars as they're waiting for the new car market to recover. Some people are also switching to other modes of transportation such as public transit, biking, or walking to save money and reduce their environmental impact. These factors are also creating a surplus of used cars in the market, which lowers their prices. The used car market has significant implications for the economy and consumers. For the economy, the crash can lead to lower inflation, as the high prices of used cars have been one of the main drivers of inflation in the past year. According to the U.S. Bureau of Economic Analysis, the Personal Consumption Expenditures Price Index, which measures the changes of the price of goods and services consumed by Americans, rose by 4% in the year ending in June 2021. This is the highest annual increase since 2008. However, if the prices of used cars fall, this could reduce the overall inflation rate and ease the pressure on the Federal Reserve to raise interest rates. Luxury automakers, noted for their high resale prices, are now encountering issues as the market corrects. The competition for dominance in the used automobile market between BMW, Mercedes-Benz, and Audi has heated up as prices have dropped, presenting a once-in-a-lifetime opportunity for both consumers and sellers. This means that the companies that make expensive and high-quality cars, which usually keep their value for a long time, are facing problems as the market changes. The market is a place where people buy and sell things, such as cars. The market changes when the supply and demand of things change. Supply is how much something is available, and demand is how much of something people want. When the supply is low and the demand is high, the price goes up. When the supply is high and the demand is low, the price goes down. Electric vehicles have also had a big impact on the used auto market. This means that electric cars have changed the way people buy and sell used cars. The supply of used EVs have increased in recent years as more people have bought new EVs and sold their old ones. According to the International Energy Agency, the global stock of EVs reached 10.2 million in 2020, up from 7.2 million in 2019. This means that more electric vehicles are available in the market for people who want to buy them. However, the supply of used EVs is not evenly distributed across different regions and countries. Some places such as China, Europe, and the United States have used electronic vehicles more than others because they have more incentives and policies to support the adoption of electric-powered vehicles. Other places such as India, Africa, and Latin America have used fewer because they have less infrastructure and awareness to support the use of electric vehicles. The demand for used EVs have also increased as more people have become interested in their benefits, such as lower fuel and maintenance cost, higher performance and reliability, and lower environmental impact. According to a survey by Cox Automotive, 40% of U.S. consumers said they would consider buying a used EV in 2020, up from 28% in 2018. This means that more people are willing to buy a used electronic vehicle, even if it is not as new or as advanced as a new EV. However, the demand for used electronic-powered vehicles is also affected by some factors, such as the availability and the price of new ones, the availability and price of charging stations, the range and battery life of EVs, and the consumer preferences and perceptions of these kinds of vehicles. The prices of used EVs have been influenced by changes in supply and demand, as well as by other factors, such as the depreciation and innovation of EVs. Depreciation is the loss of value of a car over time due to wear and tear, age, and mileage. Innovation is the improvement of technology and features of a car due to research and development, competition, and customer feedback. For consumers, the used car market crash could be both good and bad news. For those who want to buy a used car, the crash would mean lower prices and more choices. However, for those who already own a used car, the crash would mean losing value and equity in their vehicle. This could make it harder for them to trade or sell their car or refinance their car loan. Therefore, consumers need to be careful and strategic when dealing with the used car market crash. Here are some tips to help you navigate the used car market crash. Suppose you want to buy a used car. Do your research and compare prices across different sources such as dealerships, online platforms, and private sellers. Look for the best deal and negotiate a lower price. You may also want to wait for the new car market to recover, as this could lower the demand and prices of used cars even more. When selling your used car, do it as soon as possible before the prices drop further. You may also want to sell it privately rather than trading it in a dealership, as you may get a better price. However, be aware of the risks and costs of selling your car privately, such as dealing with potential scams, fraud, and legal issues. If you want to keep your used car, maintain it well and drive it safely. This will help you preserve its value and performance. You may also want to refinance your car loan if you have one, to take advantage of the lower interest rates and save money on your monthly payments. However, be careful not to extend the term of your loan, as this could increase the total amount of your interest you pay over time. The used car market crash is a major event that affects the economy and consumers. It's caused by the global chip shortage, which has reduced the supply of new cars and increased the demand and prices of used cars. However, the crash has also begun as the supply and demand of used cars are changing and the prices are falling. This could have both positive and negative effects on consumers, depending on their situation and goals. Therefore, consumers need to be informed and prepared to deal with the used car market crash. Just when you thought the used car market was stabilizing, a new twist emerges. The biggest crash of our lifetime has begun. What are your thoughts after knowing everything about this scenario? Comment your thoughts on this condition of the vehicle industry, and don't forget to like, share, and subscribe.